following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good time with the popcorn and the GOP scene last night. If you guys watched it, it's interesting, of course. Let's take a look at some currencies first and foremost. Japanese yen. This is something I've been, pretty long this year, talking about maybe blocking out the short side, even though we've been in a big downtrend. This is something, now we've got a new profile today, new unfair high on the daily, 107.72. So that's going to be a little bit of a takeoff point on this. I'm still just trying to, again, stay with the long-term view on this and not get shaken out, similar to the euro. That's the weekly, excuse me. Apologize for that. This is the weekly view, 107.72. That's a pretty powerful inflection point there. I think we can be reached, I think it can be reached easily. So, how do you play defense on this? That's the most important feature. In my opinion, you got to look at stops below 105.35, 36 down in that area based on your appetite for risk. Again, we're kind of compressing up into a new 240 here. So the ultimate goal now in the short run is 107.72. Let's take a look at the euro. This is something I've been trying not to get shaken out of this trade either. Got a hedge on personally on this one, and I like the way it's acting now. Here's the, looks like it's just getting weaker and weaker chart-wise. Ultimate goals on this one around 109 in the the first stop. I think we can go much lower on the euro, actually. So that's the scene on the euro. Here's the British pound. Talked about, support on this one, 130.78. Talked about this yesterday. That's going to be your kind of support area. And then you've got something up top on the euro, around 133 right now. Here's the 240s. Not really paying attention too much to the 240s on this one because, you've got a volatile instrument. You've got a lot of unknowns right now. And the longer-term inflection points are a little bit more impacting, I guess, than the shorter term on this right now. Aussie dollar had a little bit of a pullback on this one. Talked about yesterday possibly using 75.69, 75.70 as support on this. Had a caller or somebody in the den actually talk about this, but this is what stops are for, folks. And then you got a chance to kind of really back the truck up on the powerful weekly unfair lows. And again, that's why I don't play around with the POCs a lot. This was, again, something to try to use yesterday, not in a big way. But again, I think now you've gotten into something that's extremely attractive down here, around 74.81. And we've reached a low this morning of 74.87. So I would call that in the neighborhood. We bounced a little bit off of there. And again, some of the things that I say on the show, like yesterday, the POC on this, in this case, on a weekly, not a bad area to pick a battle, but again, that's what stops are for. And again, you've got the much riper outside envelope of the fair auction right now to deal with. And this is where you can kind of position size a little heavier, in my opinion, on the long side. All right, we're going to hit the Canadian dollar really quick. I know we've got a lot of earnings we can talk about today, but we just want to cover the usual bases. Getting a little bit weaker, getting back into the fair auction. But I think the main thing we want to look at here is going back into our long-term chart on the weekly. We've got a pretty wide profile, and we're kind of bumping up into the top of the mountain here. And that POC would have a little bit more relevance than the POC type environment that we looked at on the Aussie dollar. I mean, this on an average basis, this is a relatively wide profile, and this POC's got to be paid attention to. On that note, we've got to look at oil. Whenever I look at the Canadian dollar, I always want to look at oil. Here we go. You know, oil kind of hovering around here, spinning around down. I think oil's kind of a no trade, but again, you know, when price action gets down into these envelopes, you want to see them just get away from it, and that really hasn't happened. That could be looked at as continuation pattern. It doesn't have to be looked at as a basing pattern down here. I mean, the price is down here for a reason, and people are, you know, the bids and offers tell the story here. So as we look at this, you know, I'm a little bit more bearish on this, but I don't think you have a huge odds in your favor on this trade right now. Gold. Let's just hit, again, all the usual suspects before we get into some stock earnings situations. Here's gold. We talked about, you know, the big number. This is our daily chart on gold. The big number really is going to be 1315. And I think you just got to be, you know, patient on this one. That's your big, just like that Aussie dollar kind of maximum pullback inflection point you've got there. I mean, you've also got a new weekly profile trying to appear this week. This is only Tuesday, so I'm not paying attention to that too much, but 1315, 1316 again is where this is going to become extremely attractive on the long side. The dollar. This is one I've really liked a lot, and it's very similar, you know, type, not exactly like crude oil like we looked at, but when, you know, prices get into a certain area and they don't want to get away from them, for lack of a better way of putting it, those are usually continuation patterns. And you know, this dollar kind of spinning around on a weekly above this 95.76. The good news is, you know, we're always looking immediately, initially, for ways to play defense. And this is really the only, I don't, you know, try to think things are too high or too low. I've done that in the past. Sometimes it's worked out. Sometimes it's been a nightmare. But when you get these confirmations, you know, you want to be able to initially play defense and just say, I want to figure out exactly what my risk reward is immediately. So I like to be able to play stops around these type scenarios. We come up, we spin around above the inflection points. You can play defense below, and then the next stop up, more than likely, it's going to be 98 on the long-term play on the dollar. Notes, really impressively holding up, for lack of a better way of putting this, with the market just going nuts here on the upside. What do you do with the notes right now? I think you just got to wait on the notes. I mean, I'd rather see this thing get back above 132.25, have a daily close above there, and then just use that as leverage to go north again. You know, we have had a weekly profile in the 10-year edge higher. It's a very wide profile, and that POC 132.23, very similar to that daily unfair low, and we want to see it close above there. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Taking a look at the 30-year. You know, showed the weekly chart here just for a second, 170, 103. It's hard to even say that. I mean, I remember when the 10-year was like 130. I was just shocked how, I was like, this is crazy. This is never going to go any higher. Voila, 40 points higher. So you got something to play defense here on the 30-year, 170, 103. I think these rates are ultimately going to end in a nightmarish situation. Don't get me wrong. I'm not just, buy notes and bonds, just buy them. Ultimately, this is going to end just so ugly. But you can't time trading based on that type of scenario unless you just put on a massive long-term hedge and just go, play golf for a couple of years. You never know when those scenarios are going to unbuckle and just fall apart. So, you have to put the stops in, or you have to put the hedges in and just kind of, keep playing the game. You're not the only person out there that has probably uncovered that mystery. So it is what it is. And it doesn't have to be anything different. That's the damnable shame of it, I guess. So taking a look at the 30-year, you've got resistance at 174.26. Yeah, Duffy said something very, very important. It's very in the den. It's very hard to pick the top of a bubble, and people get taken out in body bags trying to do it. So it is what it is. These are where the bids and offers have figured out that this is where the market needs to be today, this second, 172.12. So now you got resistance at 174.26. 174.26, and you got support at 171.03. I know that's a big range, but again, those are where the powerful levels are, if you will, on the 30-year. John from Philadelphia, I don't know if I answered a question that you may have been asking. Just wanted to kind of give the environment. We're going to hit the grains really quick, and I promise you we're going to get into some earning stocks. This December corn is not looking very rosy here. we want to see these things get away from these inflection points, and when we continue to hit them and kind of crowd those areas, that usually means we're looking at a flush here at some point. So I'm not a fan at all of buying December corn. Want to take a look at November beans really quick. 1034 is seemingly kind of held twice. We're just kind of sloughing off here. This is our daily profile. So we've got 1034, 1035 up top, 1091, excuse me, down below, 1091 up top. What do you do with soybeans? I hope, if John from Philadelphia wants to call in about this, I'd love to hear his opinions, because this is just going to, in my opinion, going to be the Wild Wild West for a while, and waiting for the next type of fundamental news that may come out. I don't have a good opinion on beans right now. It's just, those inflection points, you may be able to play some odds around them. Let's take a look at the financials really quick. So here's where we're at. We're at the unfair highs, that 23.58. I'm not a big fan of the financials. If you watch this show, you know that I think you've got better things to be long out there. Let's take a look at Bank of America. Yeah, I mean, something relatively sick relative to the rest of the market, even though we kind of climbed up. I mean, I still think some of these stocks, you've got a chance to play on the downside. JP Morgan trading 83.60 pre-market. Let's take a look at Goldman Sachs. Obviously, they had some earnings out. So we're trading 162.08. I like how we're just hovering below now pre-market, below this weekly unfair high. Very similar to the action on the XLF. Again, I personally tried to pick a battle at 152.26. That's what stops are for. I'm trying it again personally around here. Let's take a look at UNH. See if these are real prints. Yeah. All right. So it looks like currently we're printing 140.75. Yeah, I mean, this is, you could look at this a couple of different ways. I mean, the broad market, we're going to take a look at the S&Ps. We haven't even showed them yet. But the healthcare sector, we want to look at that first. But again, this kind of spinning around and just not a lot of direction, not a lot of effort to get away from this inflection point around 140.89. That's a little concerning to try to even put on a trade right now. Let's go back into the XLV. JB, are you saying that you and Jay are taking showers together? Yeah. I don't understand what you were saying. Let's take a look at the XLV really quick. Here we go. So obviously been a sector that's been the darling of the sector world. Got a new profile attempting to appear, probably will output today. I hear you. I'm just kidding. So, how do you play this? How do you look at UNH relative to this? Let's pull up UNH. Again, I don't have a strong opinion on this one. I know we've got earnings out. Let's go back to the S&Ps really quick. Coming off slightly this morning. All right, so here's the weekly. We never really retested this 2101, 2105 area. We don't have to. Here's the daily. So here's that 2105 and that 2101 weekly unfair highs. We don't have any new profiles attempting to appear on the index itself. I want to pull up the scanner really quick and just look at some of the leverage going across the globe here right now on our daily. On the weekly, you can see that all profile net breadth calculations on the weekly and the daily are still positive. So what it does is it ranks profile breadth, and as you can see, the Nikkei is just continuing to scream when it comes to breadth. But here's the S&Ps. Not a lot of disturbances here between, you know, breadth calculations on any time frame. Let's take a look at our 4-hour. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, you know what the weekly and the daily situation is. We just showed it. So here's the 240s. Man, just impressive. And, you know, we talked yesterday a little bit about going into looking at some of these custom sorts, strong downtrend. This just happened yesterday, by the way, because I think there were 0 stocks in a strong downtrend. Breakdowns, there's 1. Strong downtrend, there's 2. Downtrend, there's a lofty total of 7. Downtrend resistance, this is just appalling, really. I mean, the amount of stocks that aren't even showing any cracks in the armor yet. But you know that sometimes when you have the earnings out, it's sometimes time to sell the news. So, you know, be wary of that, I guess. 2155 is support here. 2154 on the short-term 240s. I can't even believe we're talking about support up here. But, you know, this is kind of where the regulator of the trade up, the last big move up, the 240s, you can kind of orient stops on a long-term. Okay, let me go back to the S&P. Sorry about that. So again, you know, short-term support 2154. That's kind of your regulator. We did kind of pierce that down into 2143 the other day, but just, you know, again, that's what the outside of the envelope on the short term is. We don't have any new profiles attempting to appear yet on the long term or intermediate term. So let's take a look at Johnson & Johnson, and in the spirit of selling the news, we've been as high as 127.50. We're trading 125.75 right now. So let's keep those numbers in mind. Let's look at our daily profile. Again, kind of crowding this before the earnings announcements. So again, if you're looking to trade this from the long side, 23.45 is support on it. I wouldn't try to buy this pre-market. But again, I mean, you know, you could have some folks selling the news. You know, we've had a massive run. Maybe those earnings were baked into some of the pricing on this particular. So just be aware of that. I mean, Johnson & Johnson's had an incredible run, has just had Teflon all over it. Even during the Brexit situation, all it did was find support. So you've had a strong stock in a market that's, you know, been a little volatile, has really shown itself finding support all the time. Let's take a look at another stock that I wanted to highlight here. It's on my list. Where is it? CMA. Comerica. All right, so here's the weekly. Here's the daily. You got a print, it looks like this morning, of 44.50. I don't know. I think that's real. That's what I show. So again, climbing a little bit higher here. Had a new profile that was going to attempt to appear. We're going to have that profile this morning. So in the scanner, you will be able to see. Let me reset this. So you'll see some new inflection points on Comerica, and you'll have some things to lean on, play defense against. Either way, a lot of these stocks have had an incredible run. Be wary of selling the news on some of these things. This is a chance for possibly, you know, larger funds to get out of some of these things that have just been an incredible tear straight up. A couple other ones here. Discover Financial Services. This is after the market today. We've got, let's don't talk about that one. Got a new profile. It's going to be appearing this morning, but again, I'm not a huge fan of trading before announcements. It's better to trade the reaction on these things too, in my opinion, from what I've discovered. Taking a look at IBM. Again, you're going to have a new profile in IBM too today. In my opinion, this thing may have a chance to relax. Hadn't really had an incredible run relative to what happened last week through the S&P, so it could be slowing down a little bit and maybe able to kind of explore the fair auction down to the bottom of the profile, wherever that's going to be. So you're going to know that new profile as soon as the market gets close, or the time gets close to 9:30 on IBM. Let's take a look at the XLE. All right, so XLE really not backing off here. 68.16, still got massive support there. Crude oil, as you know, I've said there's really not a lot of leverage there, but the XLE, again, staying right above that daily for high 68.16. If you get any move up in crude oil, it should actually kind of be a good relative strength trade. Let's take a look at the utilities. And this is, why the 10-year may actually, travel back up to that 132.25, I believe is what we talked about earlier. The weekly unfair highs on the XLU are 53.02. Pre-market, it looks like we're printing 52.15. So we've, again, looking at the daily and looking out at how this thing has kind of acted over time. Amazing. Amazing in this environment. Stops below 51.65. You got 53.02 daily unfair highs and weekly unfair highs, the exact same number on the XLU. Excuse me. Let's take a look at the staples here really quick. XLP. Here's the long term. Amazing. Amazing. The staples may be running out of gas here. We may see 54.75. The good news is you've got a chance to play defense on 55.68 on the staples. Let's hit the other ETFs really quick. Consumer discretionary. Again, a lot of these things are starting to look like they may have a chance to do some kind of pullback retracement. You got 80.18 on the XLY as support now, new profile yesterday. A lot of times those profiles are explored when they appear. If they appear below price action, a lot of times that's bullish. Above, that's bearish. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Okay, I'm going to answer that question about the Aussie dollar in just a second. It's a great question. Here's CBS. Just got this off the scanner. Looked at uptrend reversals. Now I've made that disappear. Okay, so again, you know, we just kind of caved in below these dailies, which is kind of amazing. And never really made new highs recently. So the weekly unfair high is around 55, 65. Again, if the market comes back at all, you can play defense against that. I think this is a relatively low-risk trade, actually. Essex Property Trust, again, stocks that are kind of reversing from an uptrend recently. Wow. 220.83 would be the targets on the downside for this to continue south. JB Hunt, you know that broke down. Let's look at VeriSign. I like this one. 83.05. If we can get back down below there, let's just see where VRSN is trading pre-market here. It's not a lot to pick from on the short side, guys. Here's VeriSign. This is the action, just really relative to the market, just looking quite ugly. But coming down into this weekly support. So again, I think your play here is just to wait. I mean, if the market starts heading south, I think it could completely drag down stocks that weren't participating on the north side. So 83.05, I'm not looking at that as support to buy it right now. I'm looking at it as showing itself early. Let's go back to the Aussie dollar really quick. Okay. Well, we may have to restart this. Okay, let me restart the currency. Yeah, I don't even put my trading machines on my trading platforms on my own machine anymore. If you can see this, these are on cloud servers. Just takes one more thing out of play. Here we go. So let's take a look at the Aussie dollar. Okay, so where are we at here? Low 74.81. Bottom of the profile is at 74.81. So we're right there. So the question is how much, leeway do you give yourself on the stop side? I mean, a lot of times that's, you set your stops too tight. If you look at automated trading systems, we play around with this literally all the time. You try to increase the risk reward or the profit factor, they call it on a lot of these CAN programs. The higher you go 2.1, 2.4, 2.8. The more you try to ratchet up the profit factor, the less and less the percentage, from what I've seen and experienced, the less and less the percentage you're going to be correct is. So what does that mean? That means that setting your stops relatively tight relative to your profit targets are a lot of times going to decrease your odds of being correct. And you guys who have played around with automated trading systems and done some back testing, you know, you're always trying to figure out, okay, what's the ripe risk reward scenario or profit factor relative to being correct, that percentage of being correct. So what I've found, believe it or not, a really good system using our information is around, you know, somewhere between 38 and 45% correct, but believe it or not. The higher we try to go being correct more, the less and less the profit factor really is. And then you're kind of trying to factor in commissions into the whole thing, and then trading too often factored into that also. So that being said, to answer this question about the Aussie dollar, where do you put the stops? It's really based on your appetite for risk. And, you know, a general rule that we have on the automated trading systems are, and we're trading a lot off of daily inflection points. So a lot of times, you know, if we have a situation where the daily infra lows are in the same vicinity of the weekly infra lows, that's what I like to call a DMZ. That's when I like to really look at this as a collection area. And we might want to start position sizing. Instead of trading one contract, we might dig in first on the weekly and then dig in again on the daily and then set a relatively tight stop. But to answer your question, you've got two inflection points here in the same relative neighborhood. And, you know, the noise factor that we've set on the scanner, going back to this thing, when you look at, and I'm going to get to answer your question in just a second, when you look at bottom or top, you know, they're all over the place. That basically is saying that we're in the 10% of the height of the box variance around that level, if you will. And that just means that, you know, there's a noise factor around these inflection points, and we're notifying you that we're within that noise factor, okay? But that doesn't mean that that's really where you set your stops. So, you know, the automated trading systems, we've looked at 20% of the height of the box stops. We've looked at 240 stop outs after we're in the trade for kind of a trailing stop situation. And there's a lot of ways to look at, you know, getting stopped out. But, you know, it's really based on, you know, a monetary thing for you and also a technical thing. So as we look at this, you know, where do you put your stops? The answer to the question, you know, I like to look at it as some kind of percentage of the height of the box. And when I'm looking at this daily, that's what I'd pretty much focus on. And now maybe 15 to 25% of the height of that box is a general rule. So I hope that answers your question. Somebody's saying something about the dollar. We got to look at it here. Yeah, the dollar is moving higher. We talked about this earlier about being able to play defense below 95.76, and ultimate targets are around 98. Still feel that way. I'm behind you, Tom. Good call there. All right, we're going to take a look at Coca-Cola. I think we got enough time to talk about this. I had some emails about this. Obviously not the most exciting thing in the world right now. But again, you know, your above profiles, you're spinning around, play defense below 45.33, I think, on the long term on Coke. We're going to hit Microsoft. And we're going to take a look at this when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're going to take a look at Microsoft and just point out something here. After the close here, but you know what I wanted to say is, you know, a lot of these stocks have had a great run. You got to watch out for the sell the news kind of factor. Doesn't have to happen. Support on Microsoft is going to be around 53.06. Keep that in mind, man. This company really, I'm impressed actually. You know, I'm kind of always trying to find the next greatest way to. I've got another thing that I deal with where there's a lot of moving parts, and Microsoft has a lot of cool things that now they've tied together. I'm sure David White probably has talked about that before on his show. But between Microsoft Dynamics and the way they've integrated Skype with all the moving parts with the Office pieces and the ability to bring people into conversations and CRMs and blah, blah, blah. I'm just shocked, you know, for $12 or $15 a month, you can put everybody in your company on a incredible all-in-one solution, in my opinion. Again, taking a look at Netflix. Not a good situation after the close yesterday. This is a great reason to not trade instruments before the announcement. Seemingly we're down, let's see where we're at here, 85. So we are trading below this morning, below the weekly unfair lows, 88.35. So again, we've kind of just traveled the entire fair auction. This is not showing this yet in our weekly chart on eSignal. But if we go into the scanner, I do want to show you something here. You're getting the pre-market, you know, where the level of the market here is in the scanner. Unfortunately, on the weekly and daily, we get this from a interactive data feed, but we're calculating the 60 and 240s. So, you know, pre-market, you're going to be able to see what's reacting on some of these earnings stocks on the shorter term time frames. But, you know, what do you do with Netflix now? If you're stuck in it and you rolled the dice on the long side before the announcement, you know, sometimes it feels good just to get out of something that's painful. I mean, this thing could sail lower. You know that's possible. And regroup. You know, I mean, if it heads lower, maybe you can catch it lower if you're interested in being long the stock. But until we get back above 88.35 and close above 88.35, I don't see a lot of reasons right now in the current structure to look at this from the long side. And if you rolled the dice on the short side before the announcement, I think you got to be looking at 88.35 as resistance now. So that's the deal. Okay, we're going to take a look at Amazon. See how this thing's acted. So, you know, huge support now. 731.50, that's the weekly unfair lows, along with this 732.86. We did not close below there. We kind of got below and bounced up. In my opinion, you still got a strong stock and a strong market on this one. It's not too high. So again, you know, Amazon pulling back to support. This has been the course of action for a long time on this stock. It breaks every once in a while, but again, I think you still got to use the bottom of the profiles to buy support on Amazon now. Guys, stay tuned for Larry's next. We'll be right back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.